I don't think that everybody should stick with what they're comfortable in knowledge at. And I think the whole journey is to step outside of your comfort zone, because that's the only way you're truly going to reach out for a non-correlated, something that's entirely different with different market fundamentals. Have to reach out beyond that comfort zone, learn about something new. And that's really the journey.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?
Hi everyone, I'm Jason Balara, and this is the Know Your Why podcast. Today I'm here with Patrick Grimes, the founder and CEO of Passive Investing Mastery, an international best-selling author and a Forbes Council contributor. Patrick's a serial entrepreneur specializing in alternative investments. So we're going to talk a lot about all of that, but before we get into it, I just want to say thank you for being on the show today. Thanks for taking the time out to come share your story with me. I'm very excited, and I'm sure the audience is going to get a ton of value out of this.
Glad to be here, Jason. And I love the title of your podcast, because that why has driven me through some tough times and some great times.
Yeah. Well, I appreciate you saying that. Let's start with your story, your background, kind of let people know a bit about you, and we'll kind of head into your business and your investing thesis from there.
Sure. So my name is Patrick Grimes. Passive Investing Mastery is our company. We do alternative investing outside of the stock market, which has been a wild ride recently. So it's definitely timely. I come back from a similar background to probably most of your listeners. I was a hardworking professional, college educated. I was a mechanical engineer, did automation, robotics, and machine design. Was doing well, and really had some interest in getting involved in alternatives. It's pretty early in real estate, more specifically, being the gateway drug to outside of the stock market for most people, and then kind of progressed from there into some other things over time. And it wasn't all daisies and dandelions at first. I lost everything in 2009 and 10, my first investment. So yeah, it wasn't an easy road, but it's a good road.
Yeah. Well, you weren't alone in losing things in 2009 and 10. I think that happened to a lot of real estate investors at the time. So have you been full-time? I mean, the background as a mechanical engineer, were you investing full-time at that point, or that was kind of a side hustle? How were things structured for you at that time?
Yeah, so this was basically my night job, was working hard through different alternative investments throughout my career. It got rough after 2009 and 10, because I did some pretty risky stuff, and so it's sort of my day gig was engineer, my night gig was investing. But after I recovered from that, I turned my night gig back to my career, got a master's in engineering and an MBA, kind of recovered financially, my ego repaired a little bit. And so I was still doing engineering and loving it. It wasn't until quite a few years later that I got into real estate again. I followed kind of the breadcrumbs of the wealthy, which means buying cash flowing, income producing investments, not speculating on new development, but I got into some single family. And then it became a night job again. While it was a very demanding career, I was making a lot of trade-offs, and I was jeopardizing the why, right? The family, friends, and hobbies weren't coming first. And that's, and for a night gig that was supposed to support a better life, a more secured future for my family, I couldn't sacrifice the time with my family. So I actually told my wife at the time, or soon to be wife, that I had to stop doing, single family for a while so that we could spend some time together. I ended up getting married, which was great. And then traded up from there and started a private equity company, partnering, and focused more on my time.
Yeah. I think that is a realization that a lot of people do come to. You're trying to build that better life for the future, but sometimes there's going to be sacrifices. But sometimes I think we get caught up in sacrificing too much now to create that thing that we're looking for in the future, and that maybe it takes a little bit longer to get there, or what. But enjoying the things that you have right there in front of you, I think is an important piece of that. So when you created a private equity company, your bio has some really interesting asset classes. I know you said real estate was that gateway drug for you. How did that what did that evolution look like for you? If you started with real estate, how did you start kind of diversifying and landing on just different asset classes to invest in?
Well, so my original questions when I was just a snot-nosed engineer out of college wasn't, hey, how do I get into real estate? It was, what's the best way to invest to essentially grow and, build more financially secure future? I didn't want to raise a family. I would like how I was raised necessarily. It wasn't bad. We just didn't have any real excess funds growing up. So I didn't come from wealth. I didn't come from money. And I thought, well, I went to college. I did well. I got a good job. I want to start investing. And so I started researching. When I went to go get advice on where to go, the advice, interestingly enough, wasn't go dump it into this high-tech company we're doing, custom equipment for, or this medical device or aerospace, or it wasn't that, which is wild to me. It was make your money in high tech and go put it into real estate. And so that's actually what led me. It was really about that. The message was about diversification into outside of the wild ride of the stock market or the high tech. And if you're so heavily indexed, like your day job, in something that is sentiment driven through the stock market, then invest somewhere else. And then I find, I think the typical evolution is people get really good at something, get comfortable in something, and then they get way over indexed in that one thing. And that's what happened to me, even with real estate. I got really into it. I got real good at it. And I just kept, rinsing and repeating, and it started taking over. Then I realized, wow, wasn't my whole intention all along, wasn't the purpose of all of that to build a more financially secure future? And if I've seen the markets for stock market and real estate take a hit, even at the same time before, does that mean I should be allocating and continuing to venture into new types of investments, ones that don't rise and fall, call it non-correlated with the real estate market, with stock market, ones that have different market fundamentals, ones that aren't governed by interest rates or the S&P or gold or oil and gas, or they're completely standalone. Wouldn't I feel better at night if I started looking at some of these and I put the effort in to learn about some of these other ones? And the answer was yes. And so the journey throughout, the evolution, as you say, is my career. It's been constantly making a measured step, a calculated step for recession resilient, non-correlated investments, not getting over allocated, but then continuing to build a truly diversified portfolio, not just in one asset class, but in more asset classes that help to stabilize that future.
Yeah, I think that's a very smart strategy. What are some of those non-correlated asset classes that you kind of came upon and started adding to your portfolio?
Well, we can highlight a couple. They're quite a bit. It's kind of there's a lot of them out there. In fact, I created a whole webinar series called the Alternative Investing Mastery Series. And that series specifically every 2 weeks dives into a different alternative investment strategy. And it was essentially for like a decade now, I've been kind of trading the baseball cards of these alternative investing strategies with just a handful of dudes. And nobody else knew about them. I'm in this high-tech space with some of the smartest people in the world, some of the coolest facilities from Tesla, SpaceX, Amgen, Genentech, Abbott, Johnson and Johnson, Google, and I'm talking to some of them. Amazing. Sorry, can you hear the dog barking here? I apologize.
Not really.
No? Hey, Mama.
Also on
Mama. Sorry, she's... Sorry about that. I can't focus with... The AI noise canceller did a really good job there. Did better than I did, I guess.
We didn't hear it. I can hear my own dog barking somewhere in the distance, but yes,
Okay.
I didn't hear anything on your side.
All right. Sorry about that. Where were we at?
We're just talking about some of those alternative asset classes. I know you said you have a webinar series, but maybe if you can highlight a few of just some of your favorites or something like that for the listener, and then of course we'll get them all of the information to connect with you and follow up. But what maybe even some of your favorites, and what did you maybe what you added first? I think would be a good probably a good piece to touch on.
Yeah, so some of my favorites, you got to look at healthcare, you got to look at education, you got to look at industries that don't require the stock market to do well, that essentially are fundamentally insulative to each other. People still need reskilling and upskilling. People still need healthcare during recessions and legal services. And that's why I'm really big in the legal space. We, as you know, have a litigation finance fund. I mean, if you look at the legal industry, like healthcare and education, it just has a steady rise. It has a steady growth over time. And it just simply doesn't care what's going on in gold, what's going on in real estate, what's going on in the stock market, or even oil and gas. So it provides for a really strong non-correlated portfolio.
Yeah, no, that's fascinating. So in these, so I'm assuming if you're saying non-correlated to real estate stocks, I'm assuming you're not investing in. I mean, a lot of people, one of the hot things, or some of the hot things in the real estate space right now would be like medical office and also assisted living facilities. Is that what you're speaking of, or are you investing in those, the medical space or legal space in different ways? I guess I truly don't know even
Oh,
what the access would be.
yeah. Okay. How do you access? So for example, when you and I'm not, it's not the litigation finance is not real estate based, but in legal office. That's not it. But interesting concept. And that's not to knock those healthcare facilities.
Yeah.
Those are some of the strong of the real estate office space. Those are potentially some of the only ones that I would recommend because the office space has been decimated, right? So, but not to knock that. Um, when anytime you're looking at, you want to approach an industry, be like, man, this legal industry. I'd really love to get some returns from that. How do you access it? Well, you've got to figure out how to provide a service to that industry. And what you're saying, Jason, as well, you could house them, right? You could essentially do a real estate play for the underlying industry. But what else do they need? There's a lot. The legal industry itself is a fairly simple industry. It just works off of mostly, sure, they're paying rent, but they're paying hourly wages. That's primarily their biggest expense. They're also doing some marketing to add new clients. Then they need to get court fees and filing fees to get their clients across the finish line, specifically in the litigation space, right? But a lot of those clients of theirs, those are harmed individuals. And those harmed individuals don't always have the funds necessary to provide for their own representation to pay for it. So just like in real estate, how you can lend to a real estate operator to either acquire or to acquire or improve a property to house the tenant, you can lend to an attorney who's working on a contingency fee basis. You can lend to them in a way, you can invest in them in a way in which it provides marketing for them to acquire new clients, or it provides operating expenses that pays the rent, the hourly wages, the court fees and filing fees, so that they can get to a settlement and get to a payoff. And then you can participate in a percentage of the payoff, right? So it's a simple asset-backed lending type strategy that is very analogous to our debt fund. We have a debt fund that lends into real estate, a diversified portfolio of real estate assets, just like how we have litigation finance fund, which is essentially a diversified portfolio of investments into attorneys that are looking for funds to carry out contingency fee-based representation. And there's liens in both cases. There's financing agreements in both cases, virtually identical to any kind of asset-backed lending strategy.
That is fascinating. I just didn't know. I didn't. It. This is actually really one of my favorite things about having this podcast is just that I get I get to learn. I hope the listeners get a lot out of it too. But it's like I get to learn about spaces that I didn't even know that was an opportunity. I think I always think it's silly that we call real estate an alternative investment when most everybody lives in real estate and or works in real estate or so it's a silly thing to call it alternative. But yeah, this is it sounds like finding ways to get even more and more creative with your investments and truly being diversified. I mean, like you said, it's not correlated to kind of anything else. And I think it's a really smart way to develop a portfolio. Return wise, I mean, what do you see if we use your litigation finance fund? I mean, what types of returns would investors expect in that space? Is that uh, comparable to real estate? Is it maybe better? I actually don't know, kind of what type of. I'm sure there's two things, right? There's return and risk. I wonder if you would kind of elaborate on how you look at these specific asset classes from that perspective.
Well, so just like any kind of investment, and keeping in mind, litigation funding, third party lending has been around since like 1910 here in America. It was when big American tobacco was saying that cigarettes were healthy, and a bunch of people said they weren't. They were dying horrific deaths. So there's a lot of cases throughout litigation finance which have been huge, massive wins, like billions. And even today, there's billions of dollars essentially being awarded. So you can get involved just like in real estate. People that are super early on, and you can lose it all, or you can make huge wins, right? Just like angel investing into a startup, or wildcat oil and gas drilling, or in that continuum, you can move to the opposite end where the judge gavelled down, the jury's settled, and there's an award coming, and now you're just doing basically an accounts receivable, which is like, let's just advance on a receivable that's coming. And that exists. So there's huge broad spectrum. And in our specific fund, we're targeting what's called late stage, which means these aren't. I don't want to lose everything again. I've done that before. I've been there in 2009 and 10. We got raked over the coals. More the tortoise, not the hare these days in my portfolio. And you're going to see that low leverage sort of approach in our income and acquisitions funds, as well as our litigation. But we're like late stage. So basically these cases have very strong, they've either have identical cases or the exact cases, which have preceded in later stages where it's pretty clear whomever this kind of big bad, evildoer, the defendant, that they actually did it, that they are the big bag. And then it is clear that the claimant or the harmed individual was exposed to whatever this is or was harmed by it, and that whatever that was caused it. And some examples of that are like Camp Lejeune, water contamination. Like for 17 years, our Marines and their families and, civilians that were on the base were exposed to harmful water. And that happened for a really long time. And unfortunately, it's caused all kinds of horrific illnesses. And the DOJ has, in fact, represented that, yes, this is, in fact, a situation that we're liable and that we caused. And so here's the new law that was passed, bipartisan, saying yes. And then the judgment fund was opened up to pay claims, and they even published a settlement grid saying, here's how long you were there, and here's your ailment, here's your settlement amount. And that's a settlement grid they can settle for today, or they can wait in the next around 3 or 4 years for individual cases, circumstances to be settled potentially at higher numbers. So that's an example of, oh man, it's really late staged. And it's the causality is actually codified into law. The liability is codified into law. It's really easy to underwrite, what a client, an attorney's client settlement would be worth based on their proof of time at the base and medical records, and then that collateral value, that contingency fee agreement that the attorney has, how much that's worth, and then how much you can lend on that. You could lend a conservative 10, 20, 30% on that kind of case, and you could participate in not only a return of your capital, but a return of the upside, a waterfall return of the overall contingency fee the returnees take.
That's amazing. Totally. I mean, obviously been around for some time, but yeah, that was something I wasn't aware of at all. And I mean, I think it's just an important thing for people to understand, that the ability to invest. There's so many people that, I don't invest because I don't understand it, or I don't invest because I don't trust the stock market, or I don't invest whatever. Ultimately, like, you should be able to find just about anything that can fit your desired risk profile, your timetable, whatever you may be looking for in a specific investment. And sure, it's great to be diversified through across a bunch of different asset classes, but also it's just great to get started. And what one of hearing this and hearing your non-correlated asset classes, maybe that allows people to feel a little more comfortable, like, hey, this is, maybe it's an attorney that's been afraid to invest and didn't know about this. And some people might say, well, how would an attorney not know about this? But listen, there's lots of people that work in real estate as real estate brokers and things like that don't invest in real estate, even though they are frontline to that asset class. So it's it's just a fascinating piece that is very cool to hear how that works and how uh, these things are accessible to people as investors.
I don't necessarily knock those brokers though, because just like how I was an engineer, not wanting to invest in more high tech, right? Stocks, high tech startups. I don't think that everybody should stick with what they're comfortable in knowledge at. And I think the whole journey is to step outside of your comfort zone, because that's the only way you're truly going to reach out for a non-correlated, something that's entirely different with different market fundamentals. Have to reach out beyond that comfort zone, learn about something new. And that's really the journey. And that's why we created the platform passiveinvestingmastery.com, because every 2 weeks, we will reach into something new. It's a completely different, non-correlated alternative from, we've had not just the real estate and oil and gas of the world, but we've done precious metals, technology metals, mining. We've done Forex trading. We've done tax deeds. We've done tax liens. We've done laundromats and CPA roll-ups and all kinds of completely different things that, as you say, once you get more and more familiar, once you start learning about these things, you're going to realize the fundamentals of a lot of these are the same. It just looks a little different. Maybe the jargon's a little different, but the mechanics are not all that different from what I am familiar with. Just like in litigation finance. If you have bought a house, then you know virtually all the steps we go through to underwrite somebody who wants to get a loan for their business. It's the same kind of appraise or valuation, loan to value, collateral, track record, financial health, skin in the game, down payment, and then do you have the ability to improve it? Are they doing draws? Or it's all the same kind of mechanisms. And that's why when I was in high tech, and I had nobody knew about any of this stuff, any of it. And but who does know about it? The private equity firms, the hedge funds, the sovereign funds. And my partner, Dave, who's been doing litigation finance for over a decade, that's what he worked for. And when we met several years back, I was like, hey, I want to get in. I want to get into this. And he's like, we only take 20 million checks. And I'm like, shoot, can't really allocate that much right now. And then and so I was on and ongoing about all kinds of private credit type investments and all. So we were riffing about these, and he finally hung up his hat in private equity. It called me and said, "Hey Patrick, let's set up a fund for accredited investors. We don't know of another one that's available, but this is a highly coveted asset class for those types of enduring wealth type organizations, institutions that realize, if you look at the pie chart, especially today, of all your investments, which one do you feel super confident in? We just had one of the biggest Fed rate hikes in all of our lifetimes since the Great Depression. Right now, we're in a tariff war, right? We're in a trade war, and inflation is just barely hanging on. Interest rates are fairly unstable. 11 out of the last 14 Fed rate hikes ended in a bust, and we didn't have the world's biggest economies betting against the dollar simultaneously. We didn't have all of these things happening simultaneously. So the engineer in me says, man, it's always good to be non-correlated in your portfolio. 99.9% of Americans aren't, but it's always good to be so. But if any time is the time to do it, it's right now. So not just in legal, like precious metals too. My gold's up 40% this year. While the dollar's declining, right? So my liquid capital, right? And if you look at the pie charts that we have in our decks, it teaches this sort of stuff.
Yeah, it's so important. I mean, you gotta spend some time, kind of really looking at your allocations and your, first funds to invest, allocations of that. What do you want to be? And it's a very uncertain time. I think certainly in the stock market, real estate, we had, the rates have been a constant topic of conversation for 3 years now, coming up on 3 years. And it doesn't seem like that conversation's going away anytime soon. So it's really just, I think that the diversification is incredibly important. So I love what you're doing and introducing people to things that, I've had, we're over 400 episodes on this, and the first time anyone's talked about a litigation finance fund. So that is a pretty cool thing to sort of add to that portfolio, that whatever you have an appetite for, it's out there. So very, very cool. Patrick, let me switch gears. I want to make sure that I ask you the questions that I like to ask every guest, and the first one is, you alluded to the show being Know Your Why. And I think you touched on a little bit, but I want to ask you the question, allow you to expand on, kind of what is your why? What drives you? You've had some success. You also went through some challenges. So what kind of keeps you moving that needle forward?
Well, it has evolved over time, right? I think just as a snot-nosed engineer, I was in a bit of a place of scarcity right out of college, and I was looking for, how to get myself out of that. And over time, I found myself succeeding in my career, and not in my first, but in my second real estate venture, succeeding. And then it became questions around, okay, I'll be an engineer forever because I am an engineer, right? I identified as an engineer, but I want that financial security. So let's achieve that. And in that process, I actually jeopardized the ability to even have a family because I was working so hard 24/7 that I had to take a step back to take steps forward. And then it became about, okay, what's the real goal here? The real goal is to live in a happy life while also supporting it. And that changed me from like the trade-offs of trade away today for tomorrow. That changed me dramatically to the valuing the why today, and being with the family. And it dramatically shifted when I became a consultant, more contractor in engineering. I was remote. My wife and I, we spent most of COVID in Hawaii during that time, right? It was pretty awesome. And then it made me be able to take time then to look at, okay, ultimately, what does this mean, this financial security? Well, it just doesn't mean stock market real estate. It means other alts, right? It means other types of investments. And so the why now is not just, do I have the time? I work, like we were just talking, Jason, a little bit before, I get to work from home, right? The good and bad, the ugly, the challenges of working from home. But I get to see firsthand my little 2-year-old boy. I take him to the soccer practice. I do the swim lessons with him myself. And I get to be present during his life numerous times a day, and every morning and in the evenings. And that's really special. Something I wasn't able to do because I was traveling almost every week as a automation robotics engineer. But it's really that ability to do today. And then our mission at Passive Investing Mastery isn't just for people to get financially independent through what we're calling non-correlated investments, true diversified non-correlated investments. But it's financial security, right? And that's really the why. And that means completely different pillars of different allocations into stability, completely different markets, which the whole purpose of that, right, is the second part of our mission. And that's so that you have the resources to be able to contribute to the causes you care about most. That's time, financial, location resources, which oftentimes are not just philanthropic. Sometimes they're family, friends, hobbies, the overall vision that you have for yourself in which you're in a point of abundance, and then you can give back to those around you. I think that's why we have that second part of our mission statement, because we want to look past that kind of quote, it's kind of fake financial freedom concept, right, to actual security, and then to actual abundance. And that's the why now. The why now is to share that mission and get that out there. And we're doing it. We're doing it through educating on all the different kinds of non-correlated investments. We're like over 30, 40 some different passive investing mastery sessions, and through offering non-correlated alternative investments. And those are in passive investing mastery. They're doing great.
Yeah, that's great. And it's funny you say that it's evolved. I've actually toyed with the idea of changing the name of the podcast to the evolution of why, because so many people, myself included, have had that. Maybe when you get started, you're trying to escape something, you're trying to get out of poverty, you're trying to make as much money as you possibly, whatever the case may be. But then as you start to have success, I think that just changes your perspective on what success looks like. So you might start to have financial success, but then you realize that, as you mentioned, like that can take you away from family, that can take you away from what I would argue true success really looks like. So it is certainly an evolution of the mindset around that. When people hear this and they want to connect with you, what's the best way?
Well, so I'm only supposed to give one way, but we have a new. I want to give away a copy of my book for free. It's my give back to the world. It's passiveinvestingmastery.com/book. That's the secret link. And this is cool. I did a chapter in this with some other super cool people, lessons from thought leaders. It was an Amazon bestseller. I'm here on the cover. There's a Navy SEAL, Phil Collin, lead guitarist, the Def Leppard, some NFL, NBA players on here. Brian Tracy did the forward, Dennis Waitley, Tom Ziegler, Kevin Eastman. Really, really cool group of people. It was such a fun project. I tell my whole story from high tech to losing it all to working my way up the ladder to single family, larger apartments, oil and energy to legal finance, to passive investing mastery and our mission there. I think if it helps to sponsor anybody along their journey, it's enough of a gift for me. You have to put the name of the podcast or put Jason's name in there. If it's a random foil, we're not going to send that to anybody, but passiveinvestingmastery.com/book. And that's if you're a reader. If you're not, you can download the ebook or get a signed copy. We sign them and send them out. But on the side note, if you're not really a reader, but you're not interested in my journey, but you want to know what Patrick's favorite alternative investments are that anybody can start investing in today to immediately start building more pillars of security into their financial future and build those allocations into your pie chart where you're like, hey, you know what? This slice of my pie isn't affected by the rest of it. And that helps me sleep better at night. If you want to know what my favorite alts are for that, you go to investwithpatrick.com, investwithpatrick.com. And on that page, right, that's what it is. It's Patrick's favorite alt investments for any investor to immediately start investing in to build that financial security. And I just created that. It was kind of like by popular demand because it was the number one question. Like you were just asking, Jason, what are my favorite alts that anybody can access and nobody knows about? So I just created it. It's up there now. It's like one of the first time I'm mentioning it. Investwithpatrick.com. Check it out. And if you're interested at all, set up a call, regardless of where you're at in your journey. One of the things I love to do is just talk to people. We don't give financial, accounting, legal advice, not our jam, but I have a lot of experience with a lot of different things, and I know a lot of different alt assets. And if we're not the right stop for you, we'll get you pointed in the right direction.
Fantastic. We'll get that in the show notes so people can find the book. That's very generous of you, and also find out some of your favorites. Patrick, thank you so much for coming on the show today. Thanks for fighting through some of the technical difficulties we had at the beginning. Seemed like we got things smoothed out and we're able to keep going. So thank you for being here. Thank you for sharing everything you did. I genuinely appreciate it.
Thanks for having me, Jason.
Absolutely. Folks listening, make sure you connect with Patrick. We'll have in the show notes, but you can get a copy of his book. You can find out, truly some of the things we talked about today, I have in over 400 episodes not heard of. So really fascinating stuff. Make sure you check it out. And while you're at it, please like, rate, and review the show so we can continue to get great guests.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?